Do you remember how in 2020 the Bank Nifty would often have trending 1000 to 1500 point days even when the news for economy was bad? Well, there was a reason for it. The Bank Nifty was essentially controlled by HDFC Bank, and with Kotak Bank keeping pace with it, that was enough for a large move on the index. This is how the weightage of the Bank Nifty has changed over the last 1 year. As you can see on the screen, the HDFC Bank stock, while still being the big daddy of the Bank Nifty, last year had a 20% differential over the nearest rival ICICI Bank, 38% versus 18%. Look at how that's come down to 28% for HDFC Bank and 22% for ICICI Bank. The differential is only 6%. And you can see the weight changes in others as well. Kotak also down a bit, but SBI and Axis, look at that uptick, especially in SBI, from 5.7%, it's gone up to 12%. The two most expensive stocks, HDFC Bank and Kotak, as a result, the combined weight has come down from 53% to 40%. And for long, the troika of what was essentially seen as poor quality asset banks, that's ICICI Bank, SBI and Axis, lagged their more famed peers, but their weight has now gone up from 32.7% to 46%. So the Bank Nifty is now a much more balanced index than it was, say, last year. So what has changed? For starters, the base effect has caught up with the HDFC Bank stock. Here's the comparison of the profit growth of HDFC Bank, ICICI and State Bank of India. Now, HDFC Bank has been consistent. It's never had a rough quarter, so it's still maintained that about 18 to 20% kind of growth. But look at what ICICI Bank, which has come off some legacy issues, has done in some quarters, even reporting 500 and 200% kind of growth. And the other major turnaround has been the SBI stock, where also you have seen a big move. The other big talking point has been what my colleague Abhishek Kothari highlighted last week, and which is the net interest margin, the gap. Just look at that gap from 4.2 versus 3.13%. That was a big gap, 4.3 and 3.27%. That started to narrow. Just, gets narrowed and narrow. And by the end of this quarter, this is 3.89% versus 4.1%, which means the gap has come down from 113 basis points to 21 basis points only. And of course, the market has seen it, and hence there is a reset in the valuation. While the market has still not derated HDFC Bank, it still maintains its 3.3 times one-year price to book multiple, which it had last year as well. Look at the shift in ICICI Bank. From 1.9x, it's gone up to 2.9x. It's much more respectable compared to last year. SBI, of course, is third due to its PSU tag, but even then, it's seen a big jump from 0.86 times. In fact, percentage-wise, it's the biggest jump to 1.47 times. Well, they say form is temporary and class is permanent. So will that prove to be the case once again with HDFC Bank and ICICI Bank? Or is it fair to say that ICICI Bank is now in same class as HDFC Bank? Time will tell, but for now, that's off the chart for today.